Okay, all right, guys. So happy weekend to you. Today is Saturday, it's March. So welcome to my channel for SSS Academy. So it's been a while here, and if you are coming across this channel for the first time, so do wait to subscribe and turn on the notification bell because what I do here, I drop educational content. You understand? Just educational content, guys. So if you are seeing this on YouTube, do wait to subscribe and follow our TikTok page. YouTube and TikTok has been the more active social media platform that we have for now. So today, I just wanted to give you guys a kind of a weekly bias, right? What you should be looking out for the next week, we should be from, and today is 8, 9, 10, from 10th to 15th of March. You understand? What you should be looking out for on this particular pair, actually, Uscad, right? So, but then the same concepts you're gonna apply here, we're gonna use to analyze here. You can also apply it on the major pairs you trade. You mustn't trade Uscad. You understand? I'm just telling you guys, showing you guys how I do my analysis, right? And if you after watching this, you see it play out just the same way analysis to be, then come back to this page and watch for more content, right? So first thing I do when I get to my chart, I do my top-down analysis. You understand? I do my top-down analysis. And if you have not watched how I do my top-down analysis, you can go watch the full video. Check in the previous time. It's up to most now, most now. So check the previous video, or I might find a way to tag the video here. But today I'm gonna just start from my daily time frame. So you're just gonna watch how I do my thought analysis. So today I just want to make it very simple. And I start from my daily time frame. So don't mind how the chart is looking. All this line you see in the eye, because I told you guys the video I'm doing here is just to show you the weekly bias. And all this is watch down there. You can see Monday. This is Monday, January 3rd. This is another Monday, January 13th. This is another Monday, January 20. So I do use these lines to plot my chart week by week. So another week just ended. So I'm just gonna put the next again. But let me do that when I come down to my 1 hour. So now on the daily time frame, what am I looking out to do here? So remember that anything you do, the trend should be your friend, right? So let me zoom in again. So looking at this, what is the trend? It's an uptrend, right? US card has been an uptrend. You understand? Even without plotting your trend line, you can see it is very clear, giving breaks to the upside, break here to the upside. Although we are having a kind of consolidation at this area, we had a kind of consolidation down here. Let me bring this stuff down. So we had a kind of consolidation around here, but which I think has been invalidated, right? So price has moved to the upside and then it tested again. So we are hoping to see continue the movement to the upside. So I think we are out of the consolidation phase for now, from what I can see from the chart. So, like I said, the trend is your friend. What I want to do first is to check what's the trend of the trend of the market, what's the US card trend, of which I spotted out here to say that it's an uptrend. So what next thing I want to do is, guys, this strategy I'm giving you guys, it costs a lot, but then I'm giving it for free. So first thing I want to do here is to plot out the last, like you're working with a daily candle now, right? So that means this particular candle was candle that opened on Friday and also closed on Friday. So the next trading day is on Monday. You understand? So what's gonna happen on Monday is what we are looking at to analyze here. So I'm gonna use this my horizontal ray to this horizontal ray. I'm gonna use it to plot out where this candle open. This daily candle, it did open here, down here, and then let me put it here. It did open there, right? And then hold on. Just want to plot it exactly at that point. All right. It did open there and then closed here. So you're working with a candle close, not the wick now, not the candle wick. And it close here. Again. So you open there and it close here. So now plotting this out, that shows us where our tradable zone. You understand? So our tradable zone is all the way from here to the upside this way. I will use this my what do you call it? rectangle to map it out. So you can change it to any color you want. So I'm using purple, as you can see there. So you can change to any color you want. So just note the color you have used on whichever time frame you have used. You can see this on the daily time frame. I use green. So you need to plot this very well. Okay. So this is our tradable zone, right? This is our tradable zone. So next thing I'm gonna do here is come to the 1 hour time frame. So the guide is just pure price action. So on 1 hour time frame, I'm looking to remodify this perfectly well. So a lot of times I can be much easier for me. So this is where the daily time frame, that daily candle opened, right? This is the particular hour that opened. You can see there, right? And then you can see it Friday. You can see there, and then this is the candle, the last 1 hour candle that did close on Friday. You can see where it closed. So you are not doing anything with all this. All these are weeks when you come to the daily. So this is where the last candle closed. So that makes here. So that makes this area our tradable zone, right? This is the area we are looking to trade, right? So now another thing you should look out here is to, because what you're making sure to do that you are getting the right bias. Because if you get the wrong bias, guys, see how price moves. Price move this way. Let's say situation of an option, price move this way, higher highs, higher lows, right? Higher highs. Now the higher high, the impulse move, like if it's a downtrend, the impulse move is to the downside. If it's an uptrend, the impulse move is to the upside, right? So you are looking to catch the impulse. After the retracement, you're looking to catch the impulse, which will obviously break out this last high that is here, right? They still give you under higher lows, under impulse to break. You understand? So, but if you are catching the retracement, if you are seeing this area, if you are kind of person that will see this area as a supply zone, okay, let me see, you're able to catch, you're catching the retracement all the way down. So you have to make sure you close your profit, even at the 50% area, you understand? So with that, you can be able to catch a longer move. That's why we are much interested on the movement to the down to the upside, impulse move. You understand? So let me go back to where we were. So what I'm trying to say is that everything we're gonna do here now on this 1 hour is to make sure that we are on the right bias, on the right, doing the right thing, like either a sell or a buy. Or which we started plotting out from the daily, which we saw that it was an option, and then we still saw the last candle closing as a bullish candle. You understand? So which is mapped at the open and then the close. So now another thing you have to see here is that at a point, Usdcad had been buying at a point, it created a double top here. You understand? Let me map out with these two. Create an equal highs or a double top, whatever you call it, down here, up there, and then started pushing to the downside. Now, if you plot your counter trend line to connect the high, this is a high, and then this is the last high it has dropped before this impulse to the upside. If you connect this way, we are not much interested on all this high. These are internal structures, right? Because market has closed. That's why it's important. I do my analysis mostly at my after price. I've done what it's doing for the day. You see what it has done, and then know what you're looking at for next, right? So now prices are broken. Prices are broken above this high. You understand? This was a supposed area price was continue to sell if it continue to it was to continue the downward movement, but then it did broke above it. You understand? And then now we are working on, okay, that's a second confirmation for a buy bias, right? So next thing we want to do here on this 1 hour, right? Since is to confirm to what direction has price given the last break. You understand? When I say break, I mean BOS, break of structure, which is right down here. This is a break of structure, yeah. So we label it. Let me. So that's the BOA. So I will just remove. I like putting the charts in it. So I will remove this at first. Remove this here. So you're done with that. That has given us what we needed, right? So break of structure done there. And remember that after each break, we should have a retracement or a correction phase, right? Then before you catch another move to give you another break to the upside. You understand? Now, another thing I want to do here is I'm telling you guys how I just do my breakdown analysis. So another thing I want to do here is to use my fake retracement tool. You understand? So from the swing low, which is down here, to the swing high. Hold on, guys. So my fake retracement tool from the swing low, yeah, to the swing high, which is here. Now I'm mapping out the 50% zone, which is this golden zone 0.5, right? So from this 0.5 to 0.618 is the place we consider as a healthy pullback. You get this is where you consider as a healthy pullback. I will change this to green. I'll change this to green. All right. So with this, after doing that, I can be able to remove this retracement to have gotten what I needed with it. You understand? So this is our field retracement area. Now, what does this thing implicate to me? What does it explain to me? What this thing tells me is that I should be able to know that yes, listen, there's what we call a healthy and then an unhealthy retracement. What do I mean by that? There's kind of retrace any retracement that is not that doesn't retrace up to 50% is an unhealthy retracement. And then I don't know for you guys, but for those of you who consider this low, right? You consider this as the low that gave this break, right? That's actually wrong. Look at the low you should working with, right? This is the low that gave this break to the upside. So that's how you have plotted our fib retracement to all the way from here to from the swing low to the swing high. Why am I saying this? If you have plotted from this swing low to this swing high, you'll be having your fib retracement to the 50% discount around here. Let's just do it. Let's just do it. You're plotting from here to this swing high. Now, see where you have your 50% area. You can see it, right? And of which, if you work with that, it will give you an unhealthy retracement. You understand? They give you an unhealthy retracement. You get so we're gonna remove this. So now we have gotten the 50% discount. So let me just map it up to just a single line. Let's map it up in just a single line. Okay. So just from the 50% area. So then I can be able to remove this. You understand? So this is my 50% adjustment area, counting from here to the upside. Now, another thing I want to do here is okay, this is just a confirmation that when price begin to retest from here, lower lows, lower highs, and comes all the way here, you understand? I confirm that this price are giving me a healthy retracement. Now, why am I so interested on price giving me a healthy retracement? Now, for those of you who understand structural liquidity, I think I have made a video on structural liquidity, right? You can still check it out. Now, when price gives something like this, a higher highs, right? And then price give a retracement, and then push to the upside again, right? Giving a break, right? Now, some people consider this as a low that they want to place their order block or a kind of a point of interest. What are they hoping for? Waiting for price to retrace all down here for them to buy. You understand? Yeah, here. So you might have to do that some of the time. It will work for you. But remember that there's no even strategy that is 100% accurate. So even though that works, won't work 100%. So the one that do fair won't fair all the time. Sometimes it manipulates you to work. You get. So now there's what we call structural liquidity. I don't want to go into it deep. I've made a video on structural liquidity. So what I'm trying to say is that if price doesn't give me up to 50% retracement, which should be okay. Price have put all the way from here to here. If you place your fib retracement to, let's be doing everything here. We got time. If you place your fib retracement from here, swing low to swing high, right? So this area is the 50% discount. Yeah. So this is a 50% discount. And what happened there? You see price didn't test the 50% discount. So I consider it as an unhealthy retracement. You understand? So what happens in the future time, you see price retrace, and then people who are placed limit orders here, price will take this out. That becomes a liquidity. Liquidity, don't forget, liquidity is simply money. So there are a lot of orders here, which price we take out, right? And then it might test all the way to the 50% and begin to buy, or come to the area of fair value gap or whatever, and then demand properly to buy. You understand? So this is the liquidity area and inducement. Inducement is the manipulation itself, whereas the others market has taken out is the liquidity, which is simply money. You understand? So this is where you are looking to place this stuff you get. So this becomes your liquidity. This becomes liquidity. And if you're a newbie here, if you see charts like this, it simply means liquidity. Sorry. So if you see sort of like if you see something like this on charts, it simply means it represents liquidity. You understand? So this social liquidity. And even some of the time, whenever you see price give this break, right? This is a high, price it didn't retest up to 50%, and then you give another break. You do close with candle wicks. What do I mean by candle wicks? Let me explain that here. This is a candle, right? And then you see price, you see the wicks, you see rejections, candle rejections on the upside. Get. So this is where that candle opened, and then it did close here, right? And then you see another candle do open here, and it will rally all the way to the upside, and then still coming down to close here as a bearish candle now. Now, since that it's rallied all the way to the upside, what will you see? You see the wicks this way. So that's how it will keep on closing. That's how you keep on seeing the candle closing. Since you are closing, and that will open here this way. Now remember that it's the bearish candle now, red candles, or depending on your color chart. And then just you keep on seeing stuff like this. And that's how it will close. Whereas a healthy break and retrace should close this way. The pullback should be happening this way. So you just see little candle wicks just this way. So this is a situation where a healthy breaks happen. You understand? So for me, this is the unhealthy break or the invalid break. So this way, right? Whereas this is the perfect break of structure for me. And after that break, I'm very much interested on the load that gave that break this way. You understand? So this is the perfect break for me, right? So this is a perfect break for me. So and whenever price demand properly and then begin to push to the upside, and then at the time you begin to retest, what does that simply mean? Like the buyer's pressure has begun to reduce. You understand what I mean by began to reduce? Because a lot of people are much interested in taking their profits at this. Look at the last high price I dropped. So a lot of profit have been taken out here. You understand? So when price gets here, the pressure it has used to start buying from here is no longer the same. So you start having retracement. And when you reach a certain level, more positions will be open and you still rally to the upside again. Just that way. You guys understand? So that if you understand structure, you understand market structure, all this I'm saying it won't be new to you. So let's go back to the analysis we were doing earlier. So guys, trust me, if you analyze this way I'm doing, actually last week I had counted much losses, you understand? But it happens. Also, your strategy mustn't work all the time. It mustn't work all the day. It mustn't work all the week, not all the month, you understand? But stick one that strategy that once made you profitable, like consistent profit that has made you a profitable trader, stick to it. You get stick to it. The need to just know when it's not working and you trade less. You understand? You risk less. That's just a simple thing. Because here you can't win all the time. You don't own the market. So the only thing you're working here is to ensure that your wins over equate your losses. That's just a simple thing we're doing here. Your wins over equate the losses. So now we're going back to the analysis we were doing earlier. All right. So I said this is our free adjustment area. So first of all, price coming here tells me, okay, price has come to at least a 50% discount area, right? So next thing I'm looking at for here is to see the possible area that price should demand from. So I'm looking out for a support area. And then guys, remember that we had this counter trend line here, which price broke. We earlier had this, let me remove this. We earlier had this counter trend line over there, which price did break, right? So that was a support area that broke out, it failed. So, and you guys know the concept of support turn to demand and demand turn to support. So that's what we're gonna imply here to look for entry. So this was the supposed, this was the supposed support area. You understand? But then it did fail. Yes. Over here, you use you're using your breaker block. So this was the support area price was supposed. You can see price, you can see the this action there. You can see how it came here, started pushing down, but then what happened? Because it's about to change trend, it pushed to the upside. And that is why I tell you that it's not something that is 100%. Because if you have been selling all the way from here down, 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 and then at this area you wanted to sell again. Like on Thursday, I did this sell. I did this until I like close out around here. I did close out when this impulse move was happening. I did close out. So if I had waited for price to take again and then I did the sell, I will take it now. Simple. He accept the loss and observe what price is doing. Accept the loss, another be off that particular pay for that particular day and watch what he wants to do. Then the next day you have no what to do or look for it. Just calm down, look for a perfect entry. So this is a supply area that has failed. So we are insinuating that this supply area should eventually turn to be a support where price should come to demand and then begin to push to the upside. You understand? So this is I'm looking at for this to be turned to a supply turn support. You get a supply turn support. So that was one thing you should know that there should be something happening around this area. That's one thing. So then we're gonna remove this. Okay. So what I will do right here is map out my point of interest. So which if I don't want to use this, I will simply just use this right here. So this is my points of interest. Guys, don't mistake points of interest for other block. Your point of interest is quite different from your other block. I will explain. So your point of interest is just that area that you are waiting for price to just come in, right? And when price comes into that area, you are then looking out for confirmation before you execute your trade, before you take your execution. But whereas your other block is that particular point you want to execute your trade. So your other block is quite different from your point of interest, right? So whenever I just talk like this, I will label it POI, point of interest. You understand? So when I get my point of interest, now, since price have at least come down to 50% discount, you know, next time you can't price just come here and then you buy. No, it doesn't happen that way. You understand? There's nothing here that is demanding from to buy. Sometimes it will happen, but you don't want to keep on losing your money, guys. So when price come here, you know, expect a pullback, just this way until price is finally here. That's why I call it point of interest. So when price is here, being a full-time trader, then I'm on my screen. What am I doing here? I'm waiting for confirmation. That is when then I can come down to my 15 minutes time frame. And on the 15 minutes time frame, I'm waiting for price. I'm waiting for an internal change of character. Or I can say, you can see prices will give you lower lows, lower highs, lower lows, lower. This is a retracement move. So we are not interested on all this movement to the downside. I'm very much interested on when price will eventually change character on the lower time frame. And how will that change of character happen is when price creates a high, right? It creates the high and then retest. So first of all, sometimes you might see this retracement to go below this low here, right? And most of if you do go below it and then still close with candle wicks like weak rejection, consider it as a liquidity sweep out. You understand? But sometimes price might do this high, come here to form what you call equal lows or W pattern or equal, what is called it again? Bottom, double bottom. You understand? Then if the price eventually goes below this last high it has made here, goes above it, right? Then I have confirmed that okay, it's time to begin to look for entry. The aggressive one begin to start to the price breaks above here. But patient enough, that is why most times you see yourself closing a mature profit. What am I mature profit? You are taking a trade and you're expecting that immediately you take the trade, price should start rallying to the upside, start going to your direction. No, it doesn't work that way. There are trillions of people trading daily. You understand? So you have to wait for price, break above this high. It will obviously, even if you don't be afraid of missing out. If you miss, there are a lot of much more opportunities to hop in. So if price breaks above this side, you're waiting for its retracement. So you can either buy at the breaker block area around here or see wait for price. Might come to yes, price has left a fair value gap. Perfect. If you see a fair value gap price has left on this 15 minutes, it's very perfect. Enter at the fair value gap. So when price is up here, that is when you begin to look for that your order block. So though you don't mistake order block with your point of interest. And all these things, you differentiate it with color. You differentiate it just like this one. It was my retracement area shades. Let me say like red. Let's use red for you. So now when price has broken above this high, sorry, when price has broken above the high, so I might put my either at the breaker block or looking for a fair value gap, which one what you are seeing on the lower time frame now, which is 15 minutes, just this way. So then you can then use a different color altogether just to differentiate it. So what are we expecting? For price to come down here and then we execute. You understand? So this is your other block. This is your other block. So this is your other block. So you put your go long position right there. And then for your stop loss, you have your stop loss just slightly below the last low, which is this. You understand? So you can see it about 13 pips. I can just make it simply 15 pips. You understand? 50 pips risk. And then if you are doing your 1:2, 1:3, so this is 30 pips, 1:2. Let's check for 45 pips. You have your 45 pips around this area. So you can see this was the last where the daily candle close. So you can also bring it all the way up here. So which is almost 1:4. It's almost, if it was about to 60 piece, it should be 1:4 risk to reward. You understand? So okay. So this is it, guys. So this is actually what I'm looking at for on USD card by Monday. What dates again? 9th, right? 9th March to 9th or the 10th, whichever one though. 10th to 15th, you understand? So for the day traders, you take your profits here. For those who, for the swing traders, you know, it can hold as much as you want, as long as this high still remains. You understand? So you can take your profit at this high, which is about 110 pips. You understand? You can see how you're able to use 15 pips to risk to catch 110. That is the power of making your lower time frame confirmation. But the important is that you have started to have your guide from the higher time frame, guys. You have started to have your guide from the higher time frame. So with this, you can just remove all this stuff and keep the chart clean. Keep it clean. Keep it clean. Yeah, so like I said, for the daily traders, you hold from here to here, take a profit about 55 pips. For the swing traders, you can hold all the way to here, but just be ready to for pullbacks. You understand? Just be ready to see your floating profit of $150, and the next minute is back to $60, right? That's retracement. You understand? And then still push to the upside. So that's if you can be patient enough. They just hold it. So this is what I'm looking out for on Uscad, guys. So what happens here if you eventually see that exactly what I've just explained here turns out to happen this way, guy, more reason you should come back to the channel and subscribe. Come back to the channel, give this video a thumbs up, you understand, and wait for more educational content. So I should make another video on AUD card too, but I have to get something done. If I have time, I will do the video either today or tomorrow being Sunday. But the important thing that all video will be uploaded before market opens on Monday. So that's it now for now, guys. So stay tuned, be stay there, be careful with your capital. A lot of traders are dying every day because of depression. Yeah, it do happen. Yeah, guys. Trading is hard, but it can make it much more easier for you. Make it much more easier for you. So thank you. Don't forget to subscribe to this channel.